Hey, what's up you guys? This is Junior Trader, and in this video let's take a look at Tesla stock. This one will be a quick video. I did one on Tesla this morning already that bears are back in control. If you already know, this video is just a follow-up on that particular video. I'm just going to provide you some more precise levels for tomorrow to watch and overall structure, but most likely this will be a quick video, and then later we'll be covering the technicals on Amazon and Apple. They had their earnings today. I'm just waiting for those guidance call happen. Price action a little bit settles down, and then I'll talk about that as well later. All right, let's jump into Tesla. So from the lens of the bulls, right now we are not bullish. All right, to put it simply, we are overall in the downward structure, and also today losing this level of 226 again. That was it. It's an intraday collapse as well on the downside to the short side. Now, this is where definitely we'll talk about the bullish scenario in just a second, but for the bears, the structure is still in their favor, lower highs, lower lows. $234 level was the pivot area, and if once we got this 226 failure, stop loss can be into the blue box for the bears. I mean, I'm explaining in the structure and how you trade. These are the principles of trading, can be applied across any given stock, right, or instrument. Now, so this was the level 214 as I was talking about, that watch this level. This is the target. We got today to 214. What from here? Now, let's go to the hourly interval. So I want to talk about the, as I said, both cases. Technically, though, things are much more in the bear's favor. Now, here's the thing. So as if tomorrow we have to see bullishness on Tesla, well, we'll have to see first consolidation. There are two things. We have to first get out of this 219 pivot, but for the bulls, it will just be a rebound play in the intraday if that happens. So that will be if we get above 219 and 37 cents and we don't break further below 214. So if we consolidate, say, gets above 219, there's a possibility of some rebound, but I would not put much emphasis on rebound. Just 20 and 50 hours moving average would be it, or maybe the level of 225, but nothing more than that right now. And those rebounds eventually at 2050, wherever you start to see price action reject again, or even underneath of 225 area, that's just for the bears to even pound again. Technically intraday also Tesla is in downtrend. And if we have any feeble rebound, and if we also break 214 and 70 cents, the next level that we can come down to is very close to 50 days moving average, 208. 50 days moving average will be up there somewhere 211. So that's what you are watching. So I do expect some bounce at 50 days moving average, this area of 200 days and 50 days moving average. So if you play a short below 214, just be a little bit careful. You have a very less range of confidence, very little. But if you rebound and see a feeble rebound as the levels I provided you on the hourly interval, then at like if you fail at 219, that just increases your range, or even until 225. If we rebound there, bulls can play that above 219. But if any of these places we start to reject, price action starts to falter, will then continue lower. There is much more likelihood of breaking 214 if Tesla just rejects from 219. If Tesla rebounds all the way to 225, and if it rejects there, likelihood is that we will not break 214 tomorrow. We might just come down to 219. So this is what I'm explaining you is your potential range on whichever trade you take, bull or bear, right? If you trade the rebound, then what is the range you are trading with, what is the level, and as a bear, what are the levels you are watching for potential price action reaction at, what are the areas you can see the rejection at, right? And until what range can it be traded. So if we get to 226, range can be 219 for the short from there, but that's more likely. And then if we break from 219, we reject, we can come down to 214 and below to close to that 50 days moving average. That would be it, the range in my opinion. Yeah, Tesla right now structure is not bullish. Just keep that in mind. Overall structure is also bearish, and today, as I said, losing 226 kept the structure also intraday bearish on this thing. So guys, that's pretty much it actually for this video. And if you found it helpful, valuable, please hit the like, subscribe, and I'll see you in the next videos. Bye.